right, welcome to another episode of the Caffeinated Contractor. We're going to be talking about construction loans again today. And we're going to talk about, I'm going to read it here, Fannie Mae HomeStyle and Freddie Mac Choicer Renovation Loan Products. And I'm not going to pretend to know what that means, which is why I brought on my friend Stephanie Drewry today from C&T Mortgage. She was with us a few weeks ago. We're talking about 203K loans for renovations when you buy a house, and there's more than one product out there, which is why we want to talk about this today. So, Stephanie, welcome back.
Glad to be back.
Excellent. I'm glad you're here. I'm glad you're here because I don't think many people really know their options. They just figure, oh, I'll get a home loan and I'll buy a house, and maybe they don't think about the options about doing renovations.
Right. And there's a lot of myths behind these products in terms of difficulty and stuff like that. So I thought it would be a good idea to really talk about these products, especially this year, for multiple reasons. Not everybody wants to buy new construction, right? It can be pretty enticing. A lot of people, they like the established neighborhoods and they don't want to drain their bank accounts or retirement accounts or go get a second mortgage down the road to make these upgrades or changes, and these products allow you to do so. So I figured it would be good to bring up in today's tight market.
Absolutely. So why would someone want to have a renovation loan?
Because, not every home's move-in ready. We know that. And for the last couple of years, we've been sitting in a market with super tight inventory for obvious reasons. I probably sound like a broken record with you, but when you have people that are sitting at 2 to 4% interest rates in today's market, they don't want to move. They don't want to leave. People buying today, they have to move. New construction's great if that's the route that you want to go. This gives you the flexibility to weigh your options and go into a home that's maybe in a more established neighborhood that you would rather be in and make those changes. And just kind of really just compare the two options. It's a single loan, so it eliminates the need for a second mortgage or the need to refinance and pay off a construction loan. So with that being said, it is a little bit more expensive than just your traditional conventional mortgage. But 9 times out of 10, it's going to offset the cost of a high interest credit card too, or a construction loan down the road and everything like that.
Yeah. So just being able to roll all that into your loan would be helpful. I'm just thinking of myself buying. My wife and I had built a couple of houses, new construction, and it just took forever, right? Yeah. Understandably. But then when you get to new construction, sometimes it comes with a landscaped yard, sometimes it doesn't. Sometimes you can roll it into the loan, sometimes you can't. But when you're like what you said, if you already have an established house, an established neighborhood, it's probably got a nice yard or a yard at least that you can work with. And then typically I would think the renovations would take less time than a new construction. New construction takes 6 to 8 months sometimes.
Yeah.
And that's a long time.
With these products, you have up to 6 months to complete the renovation.
And that's a lot quicker. So other than updating the house, what other reasons why would someone choose a product as opposed to buying a brand new house?
So just kind of finding that niche, that target market. So you've got up and coming neighborhoods. Look near downtown and other areas, even out here in the Cypress area. So up and coming neighborhoods is a good one. COVID changed the dynamics of a lot of things. And one of those is working from home. So if you have a smaller home and you just don't want to move, you're not seeing anything, it gives you the flexibility to add an office and make other changes that you want. The flip side of that, educating from home. I've seen a lot of people pull their students out of the school system and want to homeschool their kids. And this gives you that extra, at least the flexibility to add that extra room or whatever it may be. Are you familiar with the term sandwich generation? So you've got parents moving back in with their kiddos and help take care of them.
Oh, yeah.
This gives you the flexibility to add that in-law suite and just deferred maintenance. Say you're happy with your home and you just need to add or just change and upgrade different aspect, new AC, new roof, stuff like that.
Yeah. Okay. I've got some questions specific to that, but we'll get to the type of improvements that we can in just a bit. So is this something that somebody could just use for a single family home? What's the rules on that?
Yeah, great question. So the HomeStyle and Choicer renovation products, they expand more beyond the primary home. You can utilize them for an investment purchase as well as a second home purchase. And it still just follows standard conventional guidelines when it comes to down payment and everything like that. So primary home, second home, investment home, it can be used. Now when it comes to an investment purchase or a second purchase, it's one unit only. So no 2 to 4 or anything like that.
Okay. So if you're looking to do a fourplex, move into one, do a house hack situation, you can use it for a fourplex, but anything 5 and above, you cannot.
Yep, and as long as you're living in it. So this is not for, it's not an investment opportunity or anything like that.
Gotcha. Okay,
and
that makes sense.
It allows you, if you have a single family residence, with an ADU too as well.
Oh, okay. Excellent.
A lot of people don't know. Mm-hmm.
Okay, cool. So that leads into the question that I really want to get into is what kind of improvements can you do? What's allowed, what's not allowed? Because I know the 2 or 3K loan had some restrictions on it. So what are the guidelines here?
So you know how sometimes I talk about my job and a lot of times the guidelines are kind of gray. Mm-hmm. So conventional is different than than the other government renovation products in terms of there's no required improvements, unless something came up on the appraisal that was alarming, that it affected the safe and soundness of the home. But there really is no limit, so to speak, in terms of you can outdoor kitchens, luxury items, stuff like that. I think it's better to kind of ask the ineligible improvements because the improvements that you can make to the home are just so broad. So what you cannot do is you cannot move the home from one lot to another. You can't move the property. You can't convert it to a 2 to 4 unit. So you can't turn a single family into a 2 to 4 unit. And you can't turn a 2 to 4 unit into a single family. And those are really, if you dig deep into the guidelines, those are really the only things that's black and white of what you can't do. So
you can add square footage, you can add, additions, another room, a second story. If I don't know, I'm not sure we can get into like what the max you can borrow or use towards all this stuff, but all that stuff is kind of like within the guidelines that you could potentially do.
They are, and you're capped. So a myth behind these products is that there's a limit. You can only add so much in terms of renovation. So you got to really crunch the numbers. It's 75% of the as completed value. So whatever 75% of that's the max that you can take out in terms of a renovation loan.
Oh, okay. So it all depends on how much you buy the house for itself, right? Because then that would determine your budget for construction.
Mm-hmm. Exactly.
Okay. Oh, that's fair enough. So what kind of money down would this loan require?
3 to 5%. So the loans are same guidelines as just a traditional conventional mortgage.
Gotcha.
So you can go home ready and home possible as well, which is 3% down, but also a little bit more forgiving on the mortgage insurance side, and sometimes a little bit cheaper on the interest rate too.
Okay. And is this like the 2 or 3K loan where this has to be your primary residence?
Has to be your primary.
Gotcha.
You can do investment properties. The guidelines are a little bit different on those.
Oh, really? Mm-hmm. Oh, okay. Well, maybe we do an episode on investor stuff some other time. That's interesting. Okay. Well, that's cool. All right. So, they buy the house, they have their budget, they kind of have an idea what they want to do. Where do we go from there? Like how we talked before in the other episode where I've worked with banks in the past where they work on reimbursement. Sometimes the homeowners can provide a deposit and things like that. What are the guidelines for this as far as like upfront deposits to get the project going? Yeah,
so there's a materials draw at closing, and so you have up to 5 draws on the standard, up to 1 draw on the limited. The limited is just up to $25,000 in terms of renovation, so just some of your smaller items. Back in the day, I feel like those weren't smaller items.
Yeah, right.
But so for the materials draw, so the contractor would just we'll send you the bid form, and you just have to document specific materials costs, the amount of materials, total amount of materials draw for which funds are to be advanced to you guys. And then it's 50% of materials or 25,000, whichever is less. And that's what you're able to get at closing.
Gotcha. Okay. So that's for materials specifically. So does that mean that the contractor has to front the labor charge and get reimbursed later? How does that work?
Let me double check what all the soft costs include.
Gotcha. Okay. Yeah. Okay. That sounds good. And then as far as, I'm sorry, kind of detailed question. I'm just kind of thinking of like the contractor aspect of it is when a contractor would provide an estimate to the homeowner, are they wanting a breakout of material and labor, like that detail in an estimate?
It's pretty detailed. And so the bank that we use for this product is Plaza Home Mortgage. And so they have forms pre-populated, and it's just a matter of me sending those to you. To really make these loans go seamless, ideally you want the contractor to fill out these forms ahead of time before we upload the file to underwriting and everything like that. Just so it's just such a big chunk of the process. So to get it done out of the way beforehand, it just makes it go that much quicker. I mean, we can do these in 3 weeks.
Oh, wow. That's quick. Wow. So for anyone who's considering this loan product, make sure when you're talking to a contractor that, a couple of things. One, they're willing to do this paperwork and they're willing to do the estimate that is conforming to the bank standards. It might be different than how they normally operate, but if they want the job, they have to do what the bank is asking for.
Exactly.
So, I know a lot of contractors are just not on the administrative side. They're just not, it's not their strength, right? If they were, they'd be doing something different, I'm sure. But it definitely needs to be a contractor who's got a mature back office team who can support and do that type of work to help push that loan product forward, because you don't want to be held back because a contractor is dragging their feet, right? Because they're busy swinging hammers all day long and they don't have time at the end of the day to go fill out this paperwork. So that's kind of a big deal.
The seller is even willing to extend. So if contractors dragging their feet and we're going past the close date, seller's not inclined, they don't have to extend.
Right. And that just kind of falls on to like interviewing your contractors, certainly not going for the guy you find on Craigslist or maybe Facebook, but a legit company who's got reviews and has been used and got a good website and things like that, where it just looks like, and they have proven their work. And then when you talk to them, you want to make sure that they've had work with banks before. Because that's
what do you always tell us? The cheapest always ends up being the most expensive.
Exactly. Yeah. You never want to go with the cheapest bid. I know it's nice not to spend money, but when you go with the cheapest bid, typically that costs you more money than if you did it right the first time. So, but anyway, I preach that every day about. All right. So, so we go into draws, right? So I know there's a draw process. You said there's up to 5. And is there any guidelines on that? Like, at which point do you do? Does an inspector come out, make sure the work was done and all that stuff? How's that work?
Yeah. So for the standard, 9 times out of 10, a HUD consultant's going to be required. It's really going to depend on what the renovations are. And after the underwriter reviews the bid and everything like that. So when it's time for the draw, the buyers will call Plaza Home Mortgage and request that draw to be prepared. And it's going to include the lien waiver, a draw request, and the inspection. And so at that time, Plaza will issue a check made out to the borrower and you, and just kind of go from there. So it's nothing crazy. It's just a few extra steps on the borrower's end after closing.
Sure. Okay. That makes sense. Yeah, and that's typical for any bank. So if a contractor is not used to working with banks, they could probably get a little frustrated with the process. So, which is why you want to ask them, have they worked with banks before? The
contractors are vetted too. So, I mean, it's almost like a resume. Sometimes, depending on years of experience, they might ask for more recommendations than just a handful. So it just depends.
Yeah. So getting down to contractor requirements, there are requirements specific for this product or these products. And so what are they?
Just your typical license, bond, W-9 must be current year, carry 1 million in liability insurance, and then the contractor profile report, which is something that I can provide to the contractor on how to complete it and everything like that.
So what do you know what's all entailed in that profile report?
I can pull one up. Let me see if I can.
Okay.
I can send it to you. But no, it's been a while since I've looked at one, to be honest.
Is it, do they look for references or things like that, or examples of work?
Examples of work, definitely references from past jobs, and pretty detailed with those past jobs. So what kind of job was it? What was the cost of the job? What did it entail? And sometimes they might want to see pictures.
Okay. That's cool. I like that. Yeah. Some of the paperwork that I've filled out in the past was like, what's the biggest project that you've done? How much was it? What was the scope of work? Things like that.
Yeah. And they probably want to see more, obviously, when you're getting into big luxury items. So if you're putting a pool in and adding this massive outdoor kitchen within guidelines in terms of loan to value ratio and everything like that, they might want to see some pictures.
Yeah.
And really know what those references, reaching out to those references too.
So let me ask you this, and I'm not sure this is not something we talked about, but let's just say it's a big project, right? And they have plenty of money in their budget that they can do a lot of great stuff. Let's say they want to do interior, they want to do a patio, they want to do a swimming pool. Obviously, a general contractor can be the main point of contact, but do they need that just one general contractor, or can there be a pool contractor? Can there be a exterior contractor? Can there be an interior contractor? Is there a limit as far as like the contractors, how many contractors they can use?
So one general contractor, but the subcontractors is unlimited.
Okay.
So when you're getting into these specific contractors, now they're going to have to provide the same information that we need from the general contractor. So they're going to want to see the licenses and stuff like that.
Okay. Yeah, that makes sense. Yeah, because like a general contractor, like for us, we don't have a license to do a pool, but we got people in our network that build pools. Right. And we could bring them onto our team, and we just use their license and their experience and things like that. We're not electricians, but we do have electricians we work with, and we use their license. We operate. We pull permits on their license. Same thing with plumbing, things like that. That's what a general contractor does. They're really the main point of contact. They do project management, and they have the network of people to bring the team together to build this nice big project for you. So you don't want to be your own GC unless you have that experience. So it's kind of a pain. What's that?
I do not.
Yeah.
That's why I'm to hire me so I can get some experience on the side. I wish I was more handy.
Yeah, there's a lot of things I wish I could do, but I accept my gifts.
There you go. That's all we can do.
Yeah, really. All right, I want to hit on a couple of things. I wrote down some notes. So I know here in Texas, for a general contractor, there is no license requirement. So I would think that, because this is a national loan product, it's kind of like a generalized thing. Here in Texas, there's no general contractor license, but of course, if you're going to do electrical work license, plumbing work license, even roofers don't need a license out here. But what you want to look for is, are they a part of a professional association where they do invest in their professional development? For example, here I'm a part of the Greater Houston Builders Association, things like that. The Texas Association of Builders, I'm a member of that, and the National Association of Home Builders, like things like that. Even though there is no license for a general contractor, we're members of these organizations where we are involved with, and we actually get professional development. We're up to date on all the codes and things like that. So, is there, do you have any, anything behind or anything to add to that license thing as far as a requirement for states like Texas that don't require one?
So I try to double check it, and I'll triple check it again. I was told that a license is still going to be needed, but let me talk to the higher up of our renovation department just to triple check.
Okay. Yeah, that sounds good. I mean, and then obviously if we're doing electrical or plumbing work, we use their licenses, of
I mean,
course.
literally the way the guidelines are written is all licensees will be verified with state and local authority. So,
Okay, that makes sense.
but let me make sure it's not lender specific.
Okay, perfect. And as far as the bonds go, so one thing that I'm learning, because Elevation operates in Washington State and here in Texas. Washington State requires every contractor to have a bond, a $12,000 bond. Here in Texas, you have to have insurance, but there's no requirement for the bond. However, when you do a job, and even if you're not using this loan product and you're doing a huge job, it'd be good to get your contractor to say, hey, I want you to put a bond on this project. So they can get a bond for a particular project. And what that does is protect the customer just in case the contractor decides to up and leave. The bond protects that. I don't know the specifics on that, but I see it as a requirement. And then if you have a contractor here in Texas and they say, oh, we're not required to have a bond. Well, you're not, but the requirements here says you do. And there are agencies out there where you can actually get a bond for a particular project. So if they push back on it, make sure you're armed with information to push back on their pushback. Because they can get a bond for that.
Thank you.
Excellent.
Okay.
All right. So we talked about the draw process, draw management. So did we already cover that part, the draw management aspect?
Yeah, so that's just kind of when you guys are ready for your first draw, the buyer will reach out to Plaza and get the necessary documents needed to send.
Okay. All right. So now we know loan product, we got contractors, we got the house we want to buy, the price and everything. Everything's all set. What would be a step-by-step process for this particular product?
Okay. So obviously you find the property, you go under contract, offers accepted, go under contract. At that time, the contractor and HUD consultant will meet at the property. And sometimes you want to do this before you go under contract, at least with the contractor, so you have an idea, right? We're still in a pretty competitive market. It's hard you have these urgent offers going in. So under contract, you meet at the property, get all the information for the bid and everything like that. And then at that point, you guys will complete the renovation worksheet that we'll send over. And it's just going to lay out how all the numbers are spelled out and everything like that. And then at that point, it's just me getting everything in our system, disclosing the loan like we always would. So just moving forward with everything like we always would. Go through underwriting. If underwriting needs more verification from the contractor, say a form was not completed correctly or you missed something on the form, just little things like that. As long as, I can't harp it enough, as long as you have a good contractor who is moving quickly and getting the paperwork, the admin side of it completed, these run really smoothly. So go under underwriting, appraisals ordered, it's based on the as-is completed value, and then just close like normal. And then after closing, within 30 days of closing, you have to start the process. And then the work's completed, request your draw, and go from there.
Okay.
To dumb it down and simplify it.
Yeah.
It can seem a little bit more complex when you're actually going through the process because, I mean, the big chunk is really the bid, making sure that it is specific, everything's in line. That way we can get our numbers as accurate as possible.
Yeah. Yeah. Those estimates that come in, you really need to make sure that they're line item, that they're just not a big paragraph with one final number. I talk about that all the time. There's no transparency in that. Yeah. I was just thinking, so I was kind of looking back at what you said earlier as far as the loan amount. So let's just say you're talking about 75% of the value, right?
So, I mean, that's for the renovation cost. Now for the loan amount, the way that's calculated is you'll take the sales price and you'll add in the renovation cost contingency fund. So they're 10 to 15% contingency for any hiccups, unplanned events or anything like that. Now, if that's not used completely, then you can apply it towards your principal balance and do a little bit of principal reduction. It's not going to change your payment. It's not like a recast where it'll re-amortize your loan, but that is an option.
Okay. And so let's just say they buy the house for $100,000, and they have to buy it under market value, right?
You don't have to. I mean, so the formula is, so you'll take the sales price and you'll add in the renovation cost contingency, and that'll give you that amount. Now you take your as is completed value, so the number that we're getting from the appraiser, and you'll use the lesser of the two. So typically it's a sales price from the renovations, right? You want the home to appraise for more than the amount that you're purchasing it for, especially when you're putting some equity into it. And then you take the lesser of that, and that's how we come up with the loan amount and the amount that's financed.
Okay, that makes sense. Okay, gotcha. All right. All right. So I was thinking about this question, and like I said, I didn't ask you this earlier, so I apologize if it's a tough one. But we talked about a 2 or 3K loan a few weeks ago. You got that loan, and you have these loan products. What would make one person choose the 203K over this one, or vice versa?
Right off the bat, first is what you qualify for. So if you only qualify for FHA, you're going to be inclined to use your only option will be the FHA 203K. It's really just looking at one, if they're wanting to if it's a big renovation, probably not going to get away with it with FHA. In terms of luxury items and stuff like that.
Sure,
It's more geared towards to fixing up the home a little bit, getting it the way that you want it to an extent. So to get away with more, probably going to go with HomeStyle or Freddie Choicer. But really, it's ultimately going to come down to what you qualify for and what might be cheaper for you too in terms of monthly payment when we're looking at interest rate compared to credit, and as well as debt to income ratio. If you've got a higher debt to income ratio and you're not qualifying on the conventional route, that only really leaves us with one option.
Got it. And then for money down, is it about the same? I can't remember what the...
Yeah, so you're looking at 3 to 5% down on the conventional products and 3.5% down on FHA. Okay,
got it. Okay, yeah, that makes sense. And the FHA, the 2 or 3K loan, I remember there was restrictions on what you could do. I mean, you can't put a pool in, you can't get a jacuzzi, you can't get it like all fancy.
You can't. It's just kind of like,
what's that?
Can't add a room.
That's right. Basically, it's just putting it back together the way it was originally built or something to make it.
Exactly. And I mean, too, you can make a house look good on a budget. I mean, if it just needs new floors and new appliances and some new countertops, that goes a long way.
Oh, yeah. Absolutely. So, painting cabinets to the new ones.
Encourage people from looking at FHA 203K.
Yeah.
Especially if that's all they qualify for. I don't want them to not be interested in this product and go liquidate, their savings or something else too before looking at their options.
Of course, yeah, that makes sense. And if they let's just say, their options are both. They can do either or. If their desire is to do, hey, I want to add square footage, I want to add a pool, I want to make it as fancy as I can be within budget, they would want to go with these, the HomeStyle or the Choicer.
Correct.
Okay. I think for me personally, I'd probably go that route too.
I mean,
what's that?
I mean, if you're gonna, knowing you, you're gonna make it look nice.
I would. Well, yeah. I mean, as nice as.
And don't you have a pretty big backyard that a nice pool would look pretty good back there?
Yeah. So we're gonna have a pool guy over. Dan in our BNI is gonna come over. So we're gonna do our one-to-one meeting at the house.
Cool.
And but anyway, yeah, he and I have been talking about it. We're not going to get into doing pools, but it would it'd be nice to just talk about how we can work together where we do the patios, and because we're doing patios right now. We're doing one out in spring right now.
Oh yeah.
A patio and stuff. So I mean that's within our wheelhouse, and that complements a swimming pool. So anyway, totally off topic, but
that's okay.
Just highlighting our
capabilities. Has to do with luxury items, and that's part of it.
That's right. It is very luxurious. Nice patio set. All right. So we got, we're about 30 minutes into this. So we hit the 2 or 3K loan a few weeks ago. We have the Fannie Mae, Freddie Mae HomeStyle, Freddie Mac Choicer renovation loan products. I know there's several others out there, and we'll hit them on future episodes. But what other products are out there that people, if they're watching this episode, they could do a little research on their own?
In terms of renovation products?
Renovation, yeah. Mm-hmm.
I mean, you have your fix and flips for investors.
Yep.
Other than that, these are all that we have. It's all that I know.
Okay, gotcha.
I don't really know of any other ones outside of your traditional 4 loan product ones.
Okay. And
So you have VA and you have USDA.
yeah. Okay. So I was going to ask you about the VA one. Like, do you guys do that one as well?
Yeah,
The
so
VA.
we've got conventional FHA, VA, USDA, Reno products.
Okay.
Not as popular
Sure.
as the FHA 203K and the HomeStyle, but I think it's just a lack of knowledge out there. I think the more people become educated that these products do exist, and if you own your home currently and you want to make some renovation products, you can do a refinance on the conventional side. So these do allow for both purchase and refinance.
That's interesting.
So at that point, you'd really want to compare of, hey, does it make more sense to really just do a cash out, or should I do a reno product? And when I was pricing these out, not about a year ago, when people were asking about them, the cash out was a little bit more favorable.
Okay, got it.
And that's just pulling one lump sum out, and then you're not bound to guidelines in terms of
That's
all
true.
the documentation. You still want detailed bids from your contractor. I mean, do your due diligence outside of this, but just know that if you're a homeowner watching this, it's an option.
Yeah. Okay. All right. Yeah, I want to dig into that VA thing because
I know you're scratching for it. It'll be our next one.
Yeah, the next one we'll have to dig into that because my wife and I, we use a VA loan all the time. We've used it at least 4 times for the houses that we buy. And even the VA loan itself, I think people are not really educated on, and even there's a lot of agents out there too, who are just not well versed in the VA home loan. So it would be great to get more education on the VA reconstruct, or what is it called? The construction loan, VA construction loan?
VA renovation loan.
Okay. Yeah.
And we have the VA construction, or no, we do. Yeah, no, we do have the VA construction.
Okay. All right. Excellent. Yeah. So we'll hit that one next on our next episode. But one thing I wanted to hit on here. So there are a lot of houses on the MLS that are fixer-uppers. And, I'm not sure, Linda's looking at them all the time and she's showing me, because, oh, maybe we could do something with this. She's always looking for some project, but, the agents out there, if you're watching this, you're learning a little bit about the loan products and stuff, really look at, if you got a client who is looking at a house, and tell me if you disagree with this or not, but I'm just kind of throwing out some ideas here, some creativity for agents out there. They have a client looking for a house. Maybe they can't find it. Maybe they're just not competitive, for whatever reason, or it's just lack of inventory. Start looking at some of these houses that are just fixer-uppers and educate them on the renovation loans and say, hey, you can buy this house and turn it into what you want it to be, right? With this renovation. Be creative. Throw some options out there for your clients so that way they're just not so discouraged because they're not able to find that perfect house right away.
Yeah, I think it's a great talking point at open houses too. So if you're doing an open house for a home that's just kind of been sitting on the market and needs some cosmetic updates and something else, I think it's a great talking point at an open house to really get those buyers that are coming through thinking, I can make this my own. We don't have to go buy new construction and be in an area we don't want to be.
Exactly. So let's say there's an agent out there. They got a house on the market that's kind of, maybe not the perfect house. It's a fixer-upper. And they're listening to this episode and they want to highlight some of the products. I mean, is there material that you can give them that they can showcase at the open house and like, hey, this is what we can do, or this is the kind of loan products you can do, whatever?
Yeah. And I mean, I can create my own too. So put our own lingo on it or whatever type of basic information that we think is going to capture the buyer's attention.
Okay. Absolutely. And then for us, like if you're an agent, you're looking for a contractor who can work with banks and understands all this stuff, and you want someone like us to come in and just take a look and say, hey, this is what we can do. And maybe average price per square foot type thing. Like we could help out with that, just to give your clients a kind of a picture of what could be, just being a little bit on the creative side when it's competitive out there. So don't just get locked in on that. Be creative. Keep your eyes open for some fixer-uppers that your clients might enjoy. But well, cool. So yeah, this is a lot for me. I usually let Linda handle all the loan stuff. Whenever we buy a house,
She's the one. She's the one on top of it.
She's on top of it. She just tells me where to sign, and I sign. So I've heard this Fannie Mae guy or girl and Freddie Mac guy in the past. I just never understood it. So I'm learning here. But anyway, I appreciate it. We've got the FHA 2 or 3K loan episode a few weeks ago. Mm-hmm. Today we got the Fannie Mae HomeStyle, Freddie Mac Choicer renovation home loans. We'll hit the VA reconstruction loan or renovation loan next. And then whatever pops up that is in the loan world and the construction world, how they meet up, and we can talk about those things as well.
Perfect. And then another couple questions on here that I want to get some answers back to you just to be for sure on. So I'll get that to you as well. Okay.
Excellent. Fantastic. Awesome. So, all right, someone listens to this. They say, hey, you know what? I want to go forward with this. My loan person doesn't know anything about these reconstruction loans. I want to talk to Stephanie. What do they do?
They just call me. Okay. Text me, email me. I'm pretty flexible. So if evenings or weekends is your thing, as long as I don't have a prior obligation, we'll make it work and just have a conversation. Because, sometimes it doesn't make sense. So backtrack a little bit. I had a guy that was going under contract just about a month ago now, and he wanted to entertain a renovation loan compared to a conventional loan. And what he was wanting to do, he was only wanting to put about 10 to 15,000 in the property. When you really crunch the numbers, because there are extra fees associated to it, it didn't make sense. And he didn't move forward with the property, but I just want people to know that if it doesn't make sense, we'll have that conversation.
And not all loan people do that. Like you have that, like, hey, what makes sense for you? And you have that conversation with them, which is, very, you're a person of integrity, which is great. You're just not looking to make some money here.
No, absolutely. And I want people to know that we don't do these podcasts to just harp on these products and say, this is the only way to go. Just know your options. Because
exactly.
I wish this was a more popular product, especially in the Cypress area. There are some in Tomball too. There are some of those older neighborhoods. So I'm going to get with Linda and see, just some door knocking opportunities or something like that, just to kind of get some buzz in these people's ears, because we still are in a market of tight inventory, and I don't know when we're going to see a balance, unfortunately, especially when rates start to drop. You're just wondering, what do you think is going to happen at that point?
Yeah,
Demand's just going to go insane.
And we still have more people moving out here, which is cool, but it poses a problem with the housing market. But
they're moving to Cypress and Katy.
That's right, they are. They are. So, all right. Well, hey, Stephanie, I appreciate it. Thanks for spending some time with me again, and look forward to having more episodes, and especially about the VA home loan. I'm working with a veteran now. It was amazing. So he already bought his house and stuff, but he's going to be doing a renovation here pretty soon. He and I, we were on the phone. We were scheduled to be on the phone for like 15, 20 minutes. We were on the phone for over an hour.
What's the best?
It was like, we talked about the military for about 98% of the time. It was amazing. It just brought back so many great memories. But that's one thing that, like, Linda and I really enjoy. It's like, hey, how can the veterans don't really know about the VA loan. They don't.
Which blows my mind. I can't tell you how many times I've talked to a veteran and they had no idea what the
it's crazy. It's the best thing ever. Like
it's not one of those too good to be true. It really is not.
If it wasn't for the VA loan, we probably would not have bought a house, and we've bought 4 of them using that VA home loan. And it was the best thing ever. And then I wish I would have known about the VA renovation loan, because that would have been fun, Mm-hmm. So anyway, we'll educate. We'll do our best. You and I will do our best to educate as many people as we can and push this out. But I think it's a great program for the veterans out there, and maybe we can get them some help and help them into the house that they want.
We'll get them the home that they deserve and work for and make it their own.
Exactly. All right. Well, thanks a lot, Stephanie. Appreciate it. This is not, a goodbye, because we're going to have you on several more times. So until next time, we will put a pause on this. We'll talk about the next renovation loan next time. And if this resonates with you, you can contact us. You can contact Stephanie. We'll put her phone number in the notes or something, or however you want them to contact you. And then make sure you subscribe to this. Make sure you subscribe to it on iTunes or the Apple Podcasts, on YouTube, and all the other stuff. And share it with your friends. That way they know what their options are when they want to buy a house and they want to do a little fixer-upper project.
Yes, let's get this information out there.
Absolutely. All right, Stephanie, thank you so much.
Thanks for having me. Take care.